Hi everyone, welcome to our Ask an Accountant webinar focusing on how to build a profitable private practice. Before we get started, I just wanted to share a few notes about this webinar. You will be receiving the recording and the slides from today's webinar and our follow-up email going out tomorrow morning. Also, if you're having any technical difficulties throughout the webinar, we suggest you refresh your GoToWebinar page and re-enter the webinar. We're so excited to have Edie Gardner back from our first webinar, so I'll pass it over to Edie so she can talk about building a profitable private practice. Thanks, Edie.
Great, thanks, Nick. So I am so happy to be with you guys today. SimplePractice and I are working on this series called Ask an Accountant, and in February I gave a talk that was really timely because it was about taxes. It was in February during tax season. So if you wanted to catch that video, you can go onto YouTube and SimplePractice's site. But today we're going to be talking about profitability from an accountant's perspective. So I'm definitely going to stay in my lane here, and I'm not going to venture out by talking about profitability in terms of marketing or insurance, because that is definitely not my niche. So go to the next slide. So I do have a very bizarre combo, but this was kind of always the dream. So it was a melding of, first I was a CPA, and then I knew I really wanted to be in as a therapist. So it is a real melding of these two careers, because I understand how much money affects our behaviors and our mental health. So that's where we're going to be kind of focusing today. This is going to be the main question that I'm going to really zero in on with regards to profitability, because I'm going to really teach you how to know what things cost. I find that when I ask people about their private practice and about the books of their business, their first answer is usually, I don't know anything about my financial statements or the costs or anything. I have a bookkeeper that handles that. You may have heard about a high-profile case, legal case that was in the news recently, and one of the expert witnesses was asked by opposing counsel on how much they were gaining from this client for their testimony, and their response was, I don't know, I don't do the books. And so the attorney wasn't really happy with that answer, so she asked, was it $100,000 that you've made? So, I don't know, I don't do the books. Was it $200,000 that you made? I don't know, I don't do the books. Was it $300,000 that you've made? And her answer was, that sounds like a lot, but I don't actually know. Now, unless you're a forensic psychologist, that may be an effective strategy for you to not know the actual cost, to make sure that you're more objective. But unless you're a forensic psychologist, I really want you to be able to know what the costs are of your private practice. All right. Years ago, I went to one of my groups that I belong to for businesses for women entrepreneurs. And this woman gave a really excellent talk about how to add media to your business. So she was talking about podcasts and different video and audio sources that you could use. And it was fabulous. She was talking for about an hour. But I noticed that during the entire time, she did not once talk about the cost of offering these different options. So my question for her at the end of it is, you know, I'd love to do some of these, implement some of these strategies. What are the costs? And she's like, that's the exact thing about it. That's why I'm presenting this to you. It doesn't cost me anything. I am able to do this for free. It's like, well, but I thought you said that in order to do that podcast, you have to have a membership with this organization. She's like, oh, well, yes, that is true. I did have to have a membership there, but you know what? It was really nominal. It's monthly taken out of my my bank account. I don't even see the cost. It's really not that much. So okay, well, I thought you had to spend a lot. You were recommending some really fancy equipment. It's like, yes, but that was a sunk cost. I bought that a long time ago. So she really at the end of it, when I kept pressing her, I was really obnoxious, but I kept pressing her about the different memberships. And it turns out that she was spending quite a bit, but it was just monthly taken out of her bank account. And she wasn't even aware of how much those little costs kept adding up. Or she had already spent money previously on, and she thought it was just a sunk cost, that it was about equipment that she had. So we're going to learn today that knowing your costs are really the bottom line. It really does add up when we have lots of different costs. Okay, so what's kind of fun about today is that you are already the experts in terms of how to do therapy. So today we're just going to take some of those skills that you teach your clients and we're going to apply them to your business. So today we're going to be doing what I like to call book therapy. And for our first therapy lesson, number one, we're going to talk about your toxic relationships and childhood labels. So just as you would do in therapy, you would want to know where they may have had some childhood experiences that have affected their current behaviors today. So your childhood relationship with money, how your family dealt with money issues, really does affect how you do business today. I personally grew up knowing and seeing some devastating effects of the manipulation of money. So I learned how manipulative money can be to get people to do certain things. And so that's my background. But I find that that's kind of a common background with many people where money has been used as a manipulative tool. All right, so how much is our worth tied to how much we're making? So is there a ceiling on how much you think you're worthy of earning? Now, this might be subtle. You might not even realize that this is happening, but many of us are dealing with some limiting beliefs. We might have been told that we never were going to amount to anything. We might have been told you can never earn more than your spouse. And so there may be some limiting beliefs that we really want to try and tackle. How do you feel about debt? Now, your understanding of debt goes back to childhood, and how did your family handle debt? And there's no shame or guilt here about how you feel about debt. 66% of bankruptcies have to do with medical debt. So that means that either there was a catastrophic event or an illness that the costs just kept going up astronomically, or it might mean that you might have had a family member who was unable to work because of an illness and so wasn't able to meet expenses. So what is debt? Debt is just, for the most part, waiting for the future to pay at current expenses. Okay, so it really sets up your future for being incredibly stressful because of mounting debt. So most of us have a very heightened sense of responsibility, yet we can also have areas in our lives where we tend to shuffle responsibility or place blame with others. And so money issues can usually be one of those relationships with responsibility. So how involved are you in your personal financial decisions? So let's just take your family budget. Even if you don't have an extended, huge family, how involved are you in the day-to-day operations of your personal finances? Okay, so so what are the solutions to dealing with toxic relationships? Well, we want to use cognitive behavioral therapy. I'm sure we're all very skilled in using CBT in order to change our limiting beliefs. And then I firmly believe that everyone should have some kind of personal system for tracking your personal finances. I get teased about it all the time, but I still use, 30 years later, I still use Quicken in my own family finances and managing money. But there are a lot of different tools out there. There are a lot of different apps out there. Some of them are free. You might hear me mention Dave Ramsey a lot. Dave Ramsey is the financial guru who has helped millions of people to get out of debt. He has a lot of different programs, Financial Peace University being one of them. But I'm a Dave Ramsey master financial coach, and he has an app out there called Every Dollar. I highly recommend Every Dollar. It's a free app unless you connect it with your bank, and The banks charge Dave Ramsey a fee, so he has that fee passed along if you connect your transactions with your bank. But there are lots of different tools. So getting involved in your personal finances is really going to help you to get involved with your numbers in your business. Dave Ramsey is also famous for saying that a person with money problems who wins the lottery just has bigger money problems. All right, so I've organized 4 questions to really consider regarding the operations of your business, your private practice. So first of all, it's a question that we get asked a lot, that we should always know our why we are in business. But I take it a step further in why is being profitable in your business important? So what kind of goals do you have for your business that are personal goals that have to involve profitability? Profitability also means that you're looking into sustainability, about having your business go further and further and farther and farther. Does your business mission preclude you from profitability? That's also one of those ceilings. So many times I hear people in helping professions say, I just want to help people. But does helping people and the idea of charging for your services conflict? All right, so what would you do in therapy when somebody says, I just want to be happy? We would have you define what happiness is. So let's put some real quantifiable numbers behind your definition of success. So what is your personal definition of success in your business? And it doesn't just have to mean that we're putting a dollar amount on how you define success. Let's track everything. Let's know how many people do you want to serve. Let's say you have a thriving practice where you're absolutely full. You might even have a waiting list. But if your personal goal or success for you is in being an author and speaking all over the world, well, then having a private practice, even though it's thriving, might not feel like you've really made it because you have a different definition of success. So let's try and quantify that. So I'm definitely not going to talk to you about marketing, because I'll tell you this example about there's probably a problem with my marketing is that I wanted to see how many therapists there were in my area. And so I punched in my zip code into Psychology Today, and I was not in the first 5 pages. So how many, so I stopped after 5. There's no way I was going to look after 5, and I knew for sure there's no way anyone looking for a therapist was going to go up beyond the first page, likely. So that tells you that my website needs work, but it also tells me that there are a lot of therapists in my area serving clients. Now, I do all of my own private practice in telehealth, so it's all online, so my zip code doesn't make a huge difference, but it is important to be aware of how many people are out there. And so what sets you apart? What is your secret sauce that sets you apart from other mental health professionals? And does your secret sauce excite you? Or are you serving in what you do well at your own expense? In other words, do you like doing what you're doing? Do you like the niche that you've created for yourself? Because if you do, the way you serve is going to be much better. Okay, I'm going to talk to you about getting help and not getting help. So it's going to be a little confusing, but where can you delegate responsibilities in your business? We're going to talk about when to have an accountant and a bookkeeper and when maybe you can do it yourself. Where can you delegate responsibilities in your business that frees up your time and energy to really have you focus in your business or on your business? And on the flip side, where can you cut out the middle person? Okay, so this is both in knowing how to delegate, but also being able to say, no, I think I can gain the expertise in doing this particular area and I can do it myself. All right, therapy lesson number 2 is to know your motives. Can you answer your why? So again, we're going back to why, but how front and center is your personal mission for your private practice? So just as we deal with our clients on their values, and when their actions are not gravitating towards their values, there's conflict, right? So how much is profitability a part of your mission? Or does the idea of you benefiting in your business create discomfort? Again, we get back to some limiting beliefs. Are issues of self-worth holding you back from profitability being a goal? Again, this is subtle, but we all know about self-sabotage. And so you want to make sure that you're really working towards your own values. So some of the solutions are to connect your business whys to your personal values. Constantly ask yourself if you're working in your mission. It's really easy to get distracted by shiny object syndrome, right? It's by different kinds of work. And you want to make sure that you're really gravitating towards the work that really builds you up as well. Sometimes we can get sidetracked on that there are certain needs that need to be met and that we get called to maybe going a little bit beyond our competency, but you really want to make sure that it's towards your values and where you excel. So we want to tie profitability to being sustainable, to helping more people. And then finally, would you use your service if you suffered in the same areas as your clients, or are you asking them to invest where you would not? Let's say you do not take insurance. And so are you, but the idea, if you needed to see a therapist yourself, would you not even consider going outside of your own health care plan? In other words, are you asking your clients to do something that you wouldn't do yourself? It's going to be a hard sell if you don't believe in it as personally. All right, therapy lesson number 3, being in control versus asking for help. So know what you don't know. All right, so if you know you don't know the first thing about bookkeeping, let's make sure you find out how to do your books and learning from an expert. Experts aren't cheap, so the cheapest option may be your most expensive in the long run. Do you really have to outsource it, or could you just build your confidence? So this has to do with a lot of, I mean, there are a lot of people who are going to sell you some stuff when you own your own business, right? So do you really have to outsource all of that work, especially with regards to marketing? Do you really have to outsource it, or can you do some of this organically yourself? Be creative with marketing your business. Show off your expertise. There are many ways that you can get your name out there that have nothing to do with websites or your profiles. You know, networking, of course, is can be very creative in going to where your clients are. Where can you take back control of your ethical practice? So I find that the more, you're going to hear that I do a lot of side jobs, and the more side jobs that I do, everybody's got a different way of different rules and different way of telling me how to do my own business. And some of them don't work for me in terms of how I ethically practice. So make sure that you're taking back control. All right. Now this one is particularly sensitive to me. Don't be treated like a product where others are profiting from your license, where you have all the risks and liabilities. I have a side gig where I get absolutely zero support in terms of they take in all the clients, and I get very, very, very little support from them in terms of some of the logistics of handling the membership. And their answer is to me is that, hey, this is your practice, you know, however you need to practice, you do that. But I'm within the confines of how much I'm able to interact with the very agency that's providing the service. So make sure that you aren't just treated like a robot, and that you're just treated like someone who's providing these services. Years ago, I was offered a job to work with a very complicated clientele, a very complicated diagnosis, very, very involved. I would be diagnosing, I would be working with very complex family issues, and I would be responsible for many different reports. All of that was outside of my expertise, and yet they just didn't care. So I had to evaluate, am I really serving my client correctly by taking on this this work that is completely outside of my expertise? But I tell you, they were offering me this job, and they could not care that I was not qualified to do it. So I of course turned it down. So consider your third-party payer's business model. So that's not always available for when we take insurance. So when you are private pay, you don't have to worry about third parties. services. But for example, I do have some two companies that I work with where I do tutoring for how to manage the books of your business and how to do QuickBooks. And that business model is that when I tutor somebody, and they get a percentage of my hourly rate. Perfect. But there are many services now that have a membership, and you don't get paid from the company unless you are actually having a therapy session, but they get paid their membership fee regardless. So they have incentive to not pay you as much because that cuts into their membership fee. So check out what their business model, and does your success undermine theirs? Because that tells you a lot about their motives on how much they're going to pay you. All right, so therapy lesson number 4 is probably one my favorite, is your peace of mind is invaluable. When you're starting out your private practice, and even well into your private practice, just keep it simple. You don't begin a business dependent on a certain salary. So when you start right out of the gate and have to be a full-time worker and bring in full-time salary and have it be commensurate with what you were making if say you were a salaried employee, there's a lot of pressure to deliver, but grow it organically. So keep your full-time job and do some private practice if it's allowed with your full-time job on the side so that you can build your clientele. Grow it organically and small for the beginning. You're going to be working a lot of hours, yes, but you want to make sure you don't get stuck with commitments before you have the clientele. So no commitments, especially like making rent, until you have a steady stream of income. And don't get fancy unless you really know what you're doing. So there really are no shortcuts to being profitable in your business. I'm going to talk about an example with S corporations in a minute, and that is something that can really invade your peace of mind. But really don't get fancy with the bells and whistles unless you really know what's the fully the costs that are involved, and why there are benefits to it, because there are definitely going to be some downsides. Grow slowly, focus on your own practice. So I find that people rush this process and they start taking on employees. Taking on employees entirely changes your business, your role, and your work. So start slowly, just have your own private practice. Debt creates insomnia, so only pay for present items with money already in the bank. All right, so habits are my my fifth therapy lesson, where we're going to create new neural pathways, right? So we're going to be shaking up those habits. We're going to be taking out some bad habits by putting in some new systems. So we're going to raise our standards. We're going to have consistent money habits. The more money your business is making, the more you are helping. Your business should be growing every year. You know, on Shark Tank, they ask, what was your income last year? And they compare it to the prior years. And if you aren't growing, that's a big red flag for them. I'm going to really harp on this, is you want to have current information with your books, because then you are able to make current decisions and you're able to adjust your books as necessary. It's really difficult to make changes in the way you practice your private practice based on profitability when you're dealing with 9-month-old numbers. Okay, so we want to have current information. Okay, so I did give a talk in February about taxes, but I still get lots of questions about taxes because it's very complicated, and I understand it can be very overwhelming. All right, so I just want to do a little presentation on just what to know about quarterly estimated taxes. It's in quotations because it's not actually, the payments don't actually coincide with the end of each quarter. So I'll go through those due dates in a second. Now you are a private sole practitioner, right? And so you are subject to both payroll and income taxes. When you're a salaried employee, you have things taken out of your paycheck, right? So let's say you have a contract to make $100,000. You have you don't bring home $100,000. Of course, you have You have payroll taxes, which is the employee portion, which is 7.65. So that's FICA, which is Medicare and Social Security. And then you also have income taxes withheld from your paycheck. Now, as a business owner, you are subject to both the employee and the employer portion of the payroll taxes. So that's at 15.3%. So now you're paying both the employee and the employer, but that's not being withheld from your paycheck because you're just getting gross income. So we have to create another system for withholding that money for you. Now, the IRS wants to get your money throughout the year instead of at the end of the year when you file your taxes where you pay this big payment. So they want to get it throughout the year. So you no longer have withholdings, so you have to make quarterly tax payments. That's our new pay-as-you-go system, okay? So lots of people ask me, how do I make these estimated taxes, especially if I don't have an accountant? So you can go on irs.gov to pay your federal income taxes, okay? And to make your estimated payments. So this first picture is just the irs.gov under the pay, and these are the various different options that you have on how you can pay. I'd really encourage you not to use a credit card because the fee to use a credit card is pretty substantial. Hold on one second. The second picture here is how to make payments by applying for an EFTPS account, which is an electronic funds transfer account. And right down here are the reasons why you might want to consider doing that. You can make future payments, you can schedule payments and such. And then you're already in the system. You don't have to go through the rigmarole every quarter. So the due dates for your quarterly estimated taxes are April 15th, June 15th. So again, that's not the end of a quarter, September 15th, and then January 15th of the following year. All right. And don't forget that if you are in a state that assesses income taxes, that you also have to pay your state income taxes. So you're figuring out what your estimated taxes are for the year, and I'm going to go through that in a minute, but you are going to pay both payroll and income taxes with the IRS, and then you may have to pay state taxes with your state organization. So you need to know current numbers to know how much you owe. So what I'm protective of is that you don't have this big surprise at the end of the year when you go to file your taxes. I'm going to tell you how to be able to save money throughout, or to hold money throughout the year so that you can make that payment at the end of the year. But you don't want to have any surprises. You know that we have a new No Surprises Act where we need to tell our clients exactly how much therapy is going to cost them. So this is like your own, this is my personal version of a No Surprises Act for business owners, so that you don't have this huge surprise that you owe this amount of money, or that you want to put money aside for retirement at the end of the year, but you don't have it. So I'm going to tell you how to save that money. But you really do need to know current numbers in order to be able to do that. Now, I get lots of questions on how much to pay. So the rule is that to avoid penalties and taxes, penalties and interest, you have to pay either 90% of this year's tax, but the better way to look at it is 110% of prior year tax. If you make under $150,000, you only have to pay in 100% of last year's taxes this year in order to avoid any penalties and interest. Okay, so if you've done your taxes for the year prior, you know how much your tax liability was. You just have to make sure that either in maybe you have a spouse who's got withholdings because they're a W-2, you can have that calculated with you, but you want to make sure that you've at least paid in either by W-2 withholdings or by estimated tax payments, at least 110% of last year's taxes. Now, so that you don't have any surprises, you don't have to pay the government what you owe right now, as long as you've paid in 110% of last year's. Let's say this year, you've done a bang-up job. You've doubled your income. You found this incredible source of clientele, and you now have a full practice, whereas last year you didn't. So as long as you just paid in 110% of last year's taxes, you don't have to make these big payments quarterly, but you want to make sure that you're saving that money, and I'm going to show you how. All right, so let's just talk a little bit first about expenses. So when I first started, I forgot to mention that back in 2012, I started my own practice, but it was an accounting practice. So I was working, I just took on clientele that I was really more doing bookkeeping for them. And yet I found that I was doing a lot more mental health coaching and therapy than I realized with my accounting clients. So that gave me the confidence in 2017 to start my own private practice. But both with my bookkeeping practice and my therapy private practice, I was really scratching my head at how people who were doing either bookkeeping or therapy weren't earning a good income, or at least weren't making a profit. It just boggled my mind, because we're providing a service, and this service is relatively inexpensive. We do have some costs, particularly if you do have an office, you have rent, which is probably your most significant cost. But for the most part, we definitely should be making some money because our costs are so low. We don't have inventory, we don't have to worry about products or anything like that. It's really just our labor, particularly if you've kept it simple and you're just talking about you as the sole practitioner. So let's figure out what your expense percentage is. So how do you figure that? You take, let's just say for 2021, you take your income, your gross income, however much income you brought in, and you take your total expenses. You just take your total expenses divided by your total income, and that's your income percentage. Now, I know a lot of you are going to want me to say what's a normal income percentage for a therapy practice, and it really, really depends. So it very much depends on your business, particularly if you have rent. But in doing research for this talk, I saw numbers like between 20 and 40% of your you should have an expense percentage of between 20 and 40%. To me, that sounds really high. So if you were making, you were bringing in $100,000 of income during the year, and if you had a 20% expense percentage, you would have $20,000 in expenses. Unless you're paying rent, your highest cost is probably either continuing ed or your license insurance, because some of our monthly fees are really don't add up to be that much in terms of a percentage. So for sure, you want to be below 50%. There are a lot of rules that the IRS has for hobby loss rules, so we want to make sure we're not a hobby, and in order to determine that, you want to make sure that your expenses aren't super high. I mean, you definitely have to be profitable, but you definitely don't want to be over that 50% margin. But I even think that between 20 and 40, but over to the 40% is too high. So think of your expenses in relationship to your hourly rate. So if you know that there's a fee that comes in that you want to spend on something, on membership or something that's $75 a month, and your billing rate for an hour consultation or hours therapy session is, let's just say $100, then you know you probably need one more client session that equals about one more client session, or 75% of a 1 hour billing session. All right, so I'm going to teach you a system where you really do feel the burn. I want you to pay your expenses by feeling the expense each month, because then you're going to go through that mental evaluation of whether or not that expense was worth it. So many times all of our expenses are just taken out automatically. Now, you can't avoid some expenses being taken out automatically, like for example, our Psychology Today profile. That's just taken automatically out of your either credit card or bank account, right? But if you have an accounting system where it's downloading all of your transactions and you're reconciling each month, you see that expense. I remember my first 6 months of Psychology Today were free. And so then when I did my reconciliation, I'm like, oh yeah, costs kicked in. But I actually did a mental evaluation. Okay, now was I getting referrals through my Psychology Today? Was it worth it? $29.95 or $30 that I was paying. So I did that little cost benefit analysis. So spending more to pay less taxes is not a wise business decision. There are a lot of CPAs who will recommend, okay, so you've got this much in profit, what can you buy at the end of the year? This is more true with capital expenses and buying equipments and tools for more product-based industries. But you will find some CPAs will tell you that. I don't think it's a wise decision because you're going to end up with things that you really don't need just to avoid taxes. But remember, taxes are a percentage of your income. So it's just, yes, it's a large percentage, but it's just that a percentage. So you don't want to get locked into buying things that you really don't need just to avoid taxes. Okay, so there's a lot of misconceptions about paying ourselves out of our private practice. So this would be considered owner's draw. It's no longer considered pay. So that's why I pay in quotations. So if you have a system where you are automatically every single month putting 40% aside of your income that you've brought in for that month, aside for taxes and retirement, that's going to be the first layer. All right, so you're going to, you know how I said I want you to feel the burn of expenses? It's the opposite with income. When you have income coming in, I want you automatically transferring that to a separate account. I want it out of your checking account because I don't want you to see those big numbers. The second is you're going to put money aside for retirement. Just like when you get a paycheck, and hopefully you have a when you're a salaried employee and they have a retirement plan, if they offer that, you're having money taken out on top of the line so that it can be pre-tax, and you're getting a net paycheck. I want you to do the same for retirement with your private practice. So we're going to calculate your pay. So you're going to figure out what pay you really would like to be getting, and that's based on the numbers of your private practice, and we're going to hopefully be working up to a market level pay. All right, so if you were just, let's just say you were going to take off the next year to sail around the world, how much would it cost to have a therapist come into your practice and take over your practice for a while? What would their pay be? You can pay yourself by simply transferring money from your business account. I've gotten some questions on how do I actually do that. You can actually withdraw the money from your checking account. And when you're accounting for that in your accounting system, you want to put that to your owner's draw on the balance sheet. I'll get into the specifics in a minute. So let's get the order correct. We want to evaluate your personal need for your salary. So how much does your personal budget depend on your salary? You want to pay yourself a net paycheck after you've put money aside for taxes and retirement. Less income one month means less salary next month. Okay, so we're going to age our money because we're going to hopefully have our net, our salary, our net profits going towards the future. Profits do not automatically equal more pay. I'm going to show you that we want to keep some investment into our business for equity. So we're going to be your own employee. We're going to take a net paycheck. Okay, so why am I saying 40% of your income automatically gets put to savings? Because we're going to have 25% be for federal taxes. Now that might seem like a lot. You might not have a 25% federal tax rate, but the 25% initially is going to be first for your retirement, and because you can take that bottom line. And then 15% is going to be that payroll taxes that I mentioned. So you have to now have, it's actually 15.3%. So if we figure 25% plus 15%, already we're at 40%. Now, I live in California, and so I have to pay oodles in state taxes. Right now we're at 9.3%. So even just with 40% taking, withholding, I'm still, I still could be doing more, right? So if you're doing 50%, even greater. Now, that's building in already a cushion, but I want to make sure that you don't have this huge surprise at the end of the year. Now, if you can maximize your retirement contributions as your first goal, you create huge incentive to earn more for your personal budget goals. All right, so this is after you've been working a little bit in your private practice. But for me, my system is that I don't take any money out of my business until I put 100% of the money that I first earn until I get to that salary deferral. I'm going to talk about my solo 401k in a minute. So I take no earnings out of the beginning of the year. I take 100% and I put it towards I take it out of my checking account and put it towards my savings account so that I have that for retirement, because I can't touch that yet because I'm building in this savings. All right, I'm aging my money. I want to help you to age your money. So we want to retain our profits in our business for the rainy days and the slumps to still have a paycheck, so that you can be able to take a regular paycheck. We want to build up equity in your business. You want to be able to meet your goals. So we want to back into a necessary salary. So let's just say that you need $3,000 to from your business to meet some a part of your family budget, or maybe a particular goal each month. So you need $3,000 personally from your business. So really, if we're going to think of $3,000 as 60%, you need to be bringing net income in of at least $5,000. So if you need to make $5,000 net in your business, that means 5,000 divided by 4 weeks, divided by 5 days, divided by your hourly rate. That tells you how many client sessions you need to have each day, all right, in order to meet that $3,000 budget for your family finances. So there are huge incentives to be able to have retirement accounts in your business. So I personally have a solo 401k. Now, I do not have any employees, so I'm able to have a solo 401k. That's an important consideration if you have a retirement account that precludes you from having employees. If you have a different kind of retirement account that allows you to have employees, but you also have to contribute to their retirement. So you also have to factor that in when you're taking on employees. So if you can put 100% of your salary, of deferred salary, towards that maximum salary deferral, and for 2022, it's $20,500. Plus, if you're over 50 and over, you can have a $6,500 catch up. So that's $27,000 right off the top that you can put aside for your retirement. Further, you get an additional 25% of earnings, so that works out to be about 20%, up to $61,000 for 2022. So you can put $61,000 of your paycheck towards retirement. All right, so here are some of my solutions. It's to reconcile your personal relationship with money, to track everything, and then just, of course, riches are in the niches, and your happiness is an important ingredient to the success of your business. Okay, so I'm looking at the time. I'm going to really wrap it up here. So we want to make sure that you are tracking everything. Yes, I'm really going to suggest that you need an accounting system. Excel and your therapy platform like SimplePractice, these are not accounting systems. So I take the Field of Dreams mentality that if you build it, they will come. And tax preparation is just one of the reasons why you need an accounting system. You want to be able to know your numbers, especially in 3 different financial statements. I'm going to go over that in the next slide. You want to know who your best customers are, what your best services are, and what the collection results are. If you are working like a dog for a certain health insurance company, but they are the slowest payers, that really does affect the numbers of your business. And so you really want to make sure that you know what services are the most profitable for you, and you really do want to know your expenses. There's really no way to know how you're doing unless you have your books current. So I'm going to really be suggesting that you're reconciling. And then just quickly, you want to know about that 80-20 rule. Usually 80% of our efforts ends up being 20% of what's being brought in. So we want to do those resets a lot of times. You want to make sure that you aren't working so much that you're trying to fit a round peg into a square hole. We want to make sure we let go of what is not working. All right, so we have 3 main financial statements. when people are using Excel as their financial platform, they really only focus on the P&L, the profit and loss. But a balance sheet is incredibly important. A balance sheet is just a picture in time. So usually it's like 12/31/21 of what you own. Those are your assets. What you owe, those are your liabilities. And what is remaining is your net equity. So that's your net investment in the business. So assets equals liabilities plus owner's equity. Now your profit and loss statement is a picture over time. So this is results of operation over time. So we talk about it in terms of monthly results, quarterly or annually. And the goal is to put income aside automatically and to feel the payment of expenses. We want to lower expenses, obviously, and we want to increase income. Cash flow is the third statement that, frankly, it's so complex, most accountants don't even like to talk about cash flow. But cash flow basically is really making sure that your current cash position is able to meet your current short-term liabilities, all right? So if you have expenses that are due right now, so your vendors want to be paid right now, but some of your customers, like some of your insurance companies, don't pay until terms of 60 or maybe even 90 days, then you're going to have a possible cash flow issue. So budgets are plans for your money. So you want to be future focused by budgeting and planning your money. All right, let me talk briefly about accounting systems. So I am very biased. I am a QuickBooks Pro advisor, which means that I am on their website as being able to train people in how to deal with QuickBooks or some QuickBooks problems. But yes, I'm going to go out on a limb and say pretty much everyone needs an accounting system. Since my presentation in February, I've been able to meet a lot of people and consult with them on their private practices, which has been incredibly lovely for me. And I think of all the people that I've met, I think only twice I have agreed with them that at this time, it didn't make sense to invest in an accounting program. But for almost everybody, I'm going to say yes. So professional businesses, they have accounting systems. It's a formal way of tracking your profit and loss and balance sheet. It's an ability to track growth and equity over time. You get to compare from year to year how you're doing and the different services. So I mentioned that I have a lot of different side gigs, and I track it all by the different services that I provide. So I was thinking about letting go of one of my side gigs, and I work for 2 companies doing this, and offering this service. And I was like, I think I'm going to let them go. And then I found out how much they are bringing in for me. I'm like, no, I'm not going to let them go. I'm going to let them go. So it also keeps track of your expenses. As a business owner, you may be subject to having to send out 1099s yourself. But an accounting system, especially something like QuickBooks, takes care of all that for you. I mean, you still do need to do the filing, but it keeps track of how much each vendor is making that you might have to send them a 1099. It tracks how much your customers, especially think of it like your insurance companies, have brought in, and you're automatically connected to your accounts. So like your bank account and credit card, if you have one, though probably try not to have one. Your bank accounts are already connected to your accounting system like QuickBooks, and it really heavily reduces on needing to manually input your transactions. I'm just going to talk for a second about this. Parkinson's Law, you may be familiar with that regarding time. Parkinson's Law is Mr. Parkinson in 1955 gave a talk, and his whole point was this woman needed to send a postcard and it should have taken 3 minutes, but he walked us through her whole day and showed that just sending a 3-minute postcard took her the entire day. So the more time that we have is the less effort that we expend. The less time that we have, like if we have a due date, we have to do this project, it's due on this date, the more effort is needed. But we can apply the Parkinson's Law to expenses. So the Parkinson's Law says that your expenses magically expand when your income expands. So the best way to deal with that solution is to have less money in your checking account, because you're going to be putting money aside into different buckets for different purposes. So if you're not seeing that your checking account has all of this money in there, then you won't be meeting that with your expenses. All right, this slide is in blue and bright, because if you take nothing away from my talk, I hope you take this one slide. So if you aren't regularly seeing your numbers, you aren't thinking about the numbers in your business, and I'm going to help you to raise your standards. So we're going to, on the income side, we're going to force automatic savings. It's not savings though if you keep dipping into the numbers, into the funds. If you keep transferring money in and out of your savings account, it's just a transfer account then. Do you want to pay yourself a net salary? I talked about that. You want to see less in your checking. So we want to put 40% of your monthly income deposits aside for taxes. You can choose one time a month to do that, for looking at last month's income, how much you're going to transfer, or you can do it twice a month. You can do it on the 10th and maybe the 23rd, but just have some kind of system of transferring money out of your checking account and into a savings account. So this is creating your own No Surprises Act. You can use sub-accounts, or you can use multiple accounts depending on your level of discipline. So many of you are probably familiar with Michael Michalowicz. He's an author, has written many books, but one of them is Profit First Professionals. It has to do with, he teaches accountants a system where he helps clients to have several different buckets, and buckets are accounts. So he has you have like 6 or 7 different savings accounts for different purposes, like officers' compensation, taxes, and different buckets, capital expenses. I personally, my version of Michael Michalowicz's system is to use sub-accounts. So I think if your discipline is, if you're really disciplined, you can have one account, but then have sub-accounts. So you can have sub-accounts by saying this part is for retirement and this part is for taxes, because you're saving the money, you're transferring money in, but you're not taking the money out into taxes and retirement until the actual due dates, or to the end of the year for your retirement. So for expenses, you want to reduce the automatic payment of expenses, or you want to go through somehow that feeling the burn of evaluating if you've gotten the real benefit of those expenses. You want to definitely know what your costs are for each service that you provide. That's really, really important. And it's empowering to reduce your costs of doing business. It really feels good. So I'm going to now answer some of the questions that have come up. I'm going to talk even faster. So what are the most common mistakes when starting out? The most common mistake that I see is not having separation of church and state, with separating your business from your personal. You want to prove to the IRS that you are a standalone business by making sure that you have standalone accounts, and have a business bank account, and do not commingle funds. So what does that mean? That means that do not pay for personal expenses out of your business account. Okay, just don't do it. Not saving for taxes. Now you're paying income and payroll taxes, so you want to make sure that you have the money to be able to do that. No formal system of tracking financial transactions. You definitely need an accounting package. Not having current financial information, so I want you reconciling every month, and I can teach you how to do that if you would like to talk later. Not having a retirement plan. With deferred salary and profit sharing, you can save lots of money. So what are tax strategies to be more profitable? Well, first of all, I want to say that if you are paying a lot in taxes, that also means you're earning a lot in your business. You don't pay more taxes than you're earning, because it's a percentage. Now, efforts focused on saving taxes just take you away from focusing on increasing your profits. So make sure that you get really good tax advice from the tax experts, but let's have you focusing on how to bring in more income, how to lower expenses, instead of just worrying about tax strategies. Very few things are more valuable than your peace of mind. So I find that, unfortunately, there are lots of CPAs who will tell you, oh, just absolutely start out as an S Corp. And I personally don't agree with that, because if you don't know what it means to be an S Corp, then you're probably not doing it right. I just did some continuing ed, and it was an incredibly depressing statistic that I heard, that I think it was back in 2005, so it was a while ago, but in 2005 there were 36,000 people, not in private practice, but business owners who were sole proprietor, sorry, they were S corps, S corporations who made over $100,000. So there were 36,000 people who made over $100,000 who did not pay anything in payroll taxes. In order to be an S corp, you have to be taking a reasonable salary. All right. So an S corp that doesn't pay a reasonable salary will eventually have huge problems. Your peace of mind is worth more than that. So what's the most important step to do with my books? It's to reconcile your books every month. What does reconciling mean? Well, if you're old enough to know what a check register is, and believe me, I thought everyone knew what a check register was, but I was teaching accounting and I was teaching reconciling to my university students, and I said, okay, you know, when you take out your check register and you check that it's right with the bank, and they looked at me like, what's a check register? And I said, well, you know, when you take out your checks, write a check. And they're like, what's a check? So in the good old days, we used to take our check register and to make sure that what we thought we had in our checking account matched what the bank does. So reconciling is just this fancy way of basically doing that, but it's also with all of your accounts that you have. So your credit card accounts and your bank accounts. You want to make sure that all of your transactions are in your accounting system. Should I take on employees to grow and to increase profitability? All right, so this is a big one because you do not get to choose whether someone is an independent contractor or an employee. The IRS has like a 20-point validity test on whether or not someone is an independent contractor, but the default is that they're an employee. So it's really tough in this day and age to prove that that your employee is an independent contractor. They're probably going to be an employee. And why does the IRS want them to be employees? Because they want that salary withholdings throughout the whole year instead of just the quarterly system, or if they're not even doing paying the right taxes as independent contractors. Business problems absolutely magnify when you take on employees. Your role has now massively changed. You're now an administrator instead of one having your own private practice. Your retirement plans can be affected, so I can't take on employees and still have my solo 401k plan. And does expansion meet your mission? It might not even be part of your mission. Do I need an accountant or a bookkeeper? So, of course, there's a lot of variety about this and a lot of opinions about this. But I think that as a business owner, it's probably a good time to let go of the reins a little bit and have somebody else prepare your books. So have a CPA firm prepare your tax returns. You can definitely be the one that works in your books, but there are a lot of people who are used to using, you know, TurboTax or any of the personal tax systems that are they're really pretty basic. You just put in the numbers, but you also aren't getting some tax advice, and you also aren't if you have somebody prepare your tax return, if you have a CPA firm or you pretty much want a CPA firm, but you if you have them preparing your taxes, they're also probably hopefully preparing your estimated taxes, so you don't even have to worry about that. All right. QuickBooks Online is geared toward the non-bookkeeper, but that does still mean you need training. Bookkeeping is not easy or intuitive, despite the reputations that you've heard. So you need to know what you're doing in your books. But QuickBooks Online is really geared for the non-accountant. So you're not going to hear debits and credits in QuickBooks Online. It's really geared much more towards forms and things that are very easily understandable. Stay responsible even if you have a bookkeeper. So you don't relinquish responsibility for knowing the numbers in your business just because you have a bookkeeper. Okay, so do not delegate responsibility. All right, so just to review, your peace of mind is really valuable. Role model your values. It's very difficult to sell what we believe if we don't follow it too. If it's important enough for your clients, it's important enough for you. All right, so this is just my company bucket list university. I had a bucket list to go to all 50 states before I turned 50, and so I turned it into my passion. And would it be helpful to meet? So what we could meet to do is to decide what QuickBooks product might be best for you. If you do not currently have a QuickBooks product, plus I can get you a discount for the first year. If you would like to get some QuickBooks training, I can talk to you about that. And as a money coach, I teach personal finance skills and how to heal from a toxic relationship with money. As an accountability partner, I do have this program that I created, which is called Bob, which is my back office books, and it's a monthly book therapy group for those in private practice. So I teach you here some things about taxes and accounting and such, working with QuickBooks, but you also get an opportunity for lots of Q&A time while you're working it in your books. I call it an accountability program because it really is that you, it's forcing you to look at the books and your numbers every month. So there is power in the numbers. So that is the link to sign up for Bob, or if you would like to sign up for my email listing, it's bucketlistuniversity.blue is my website. These are just some of my mantras on the way we serve. If you're happy in your work, you serve in a much better way. Serving at your own expense is not sustainable and it's not profitable. We cannot ask others to respect our work if we don't do it first. Learning how to do something like taking charge of your business is massively powerful. All right, so that is my contact information, and this is one of my sayings: our behaviors rise or lower by our standards. To reduce decisions with no other option for your time and money. So just get that 40% off the books, off your checking account, and put it into savings, and then you have peace of mind. All right, Nick.
Thank you so much, Edie. That was such great content. We can already see in the chat that our audience is really loving it. So thank you again. We're already looking forward to our next webinar together. So I just want to remind everybody that this webinar will be sent out in our follow-up email going out tomorrow morning. And we're also offering those interested in creating a SimplePractice account an exclusive 2-month free trial for attending these webinars. So you'll find all that information in our email going out tomorrow morning. Thank you again, Edie, for all your hard work and dedication to these webinars. And thank you all for attending our webinar and the hard work you do every day. We'll see you again soon.